Hi, it's Dwyer, gamblersadvisory.com. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Let's get off-road a little bit and discuss economics. Two gas stations are across the street from each other. One has a better lease. And because of that lease, they have a cost advantage. So they're able to charge lower prices than their higher priced neighbor. Right? Should that gas station apologize for having the ability to charge lower prices to pass value onto their consumers? Now let's go one step further. Let's say because that gas station is able to charge lower prices, they're able to outcompete their neighbor and drive their neighbor out of business. In the process, unemploying their rivals' workers. Should that gas station have to apologize for their neighbor being put out of business? Should that gas station have to apologize for people losing their jobs at that high-priced, now out-of-business gas station? Right? In fact, in capitalism, don't we actually want competition between the gas stations, an incentive for both to deliver as much value as possible to the consumer? And don't we actually want some level of frictional unemployment where if a business cannot deliver the goods and services at attractive prices to customers, that those businesses go out of business, right? Isn't that the way it's supposed to work? Now let's think about this through the lens of the political campaigns that we're seeing today. Is it fair for workers who've lost their jobs at the higher priced, now defunct gas station to make commercials criticizing the lower priced gas station and the fact that that lower priced gas station put them out of business? Right? I would say that no, that's not fair. Let's go one step further though. Right? Let's say that a group, let's say a group of friends, buy that gas station before it goes out of business. And they try to slash prices. They try to make that gas station competitive so that it can literally stay in business, possibly add jobs in the long run. And let's say to do that, they have to cut costs because they need to offset the cost advantage that their lower priced neighbor across the street has. So just imagine that they actually have to do things like cut salaries. They have to cut part-time employees. They have to cut benefits. Right? Just imagine if they need to do things like ask their employees to do more on the job, right? To deliver more value because they have to operate with a leaner staff, right? Now, those people trying to save the previously higher priced gas station, should we view them as villains because they're cutting salaries in an effort to keep that business afloat? Should we criticize them for actually trying to save an otherwise uncompetitive business? Right? Let's go one step further. The group of friends who have bought the higher price gas station and are trying to make it competitive or trying to lure customers with competitive prices. Does it really matter whether those group of friends are publicly trading ownership shares on the NASDAQ or some other stock exchange, or whether that group of friends is just a private equity firm? Does the private ownership status change anything whatsoever? In fact, aren't we really just talking about capital used to buy a business and the group that owns that capital, whether that group is the public at large through trading on a stock exchange, or is just a group of people who have banded together to risk their capital? Let me just offer a different take. After seeing Newark Mayor Cory Booker struggle with these issues in recent press conferences and appearances on political shows, right? Isn't private equity actually a good thing? Isn't the idea of organized capital looking for businesses that they can help make successful? And sometimes that requires cutting costs. Sometimes that requires cutting labor costs. Sometimes that requires renegotiating leases. Sometimes that even requires closing particular stores, right? But isn't the goal always in the background to find a way to serve customers, to make money, right? And let's go one step further. If the group that buys the higher price gas station is able to convert it into one that can better serve consumers with lower prices, over time, wouldn't that gas station be in position to hire people? All I can say to the public is don't be fooled or misled by any public presentation that tries to convince you that the private equity status of some group that has bought a company necessarily renders that ownership group bad, right? Also, let's not assume that the ideal level of employment in a capitalist society is 100% employment. It's not. Don't get me wrong. Our unemployment rate is way too high right now. But we all know that just like the automobile succeeded the horse and buggy, and just like right now, we want people making MP3s and DVDs, not so much vinyls and turntables, right? The way technology develops over time requires change, and when you have change, you're going to have some companies getting bigger. Look at Apple today. And you're going to have some companies getting smaller, right? And when we say smaller, that means cutbacks, that means layoffs, sometimes it means corporate dissolutions, right? And so the idea that displaced employees. Employees who may have been laid off as a company tried to cut costs. The idea that employees can come forward and then say, hey, we lost our jobs. That should be just the tip of the iceberg. You need to ask the other questions. What business were they in? Why did they lose their jobs? Were they working at the expanding company, or were they working at a company that was about to go out of business when some entrepreneurs bought the company and tried to slash costs? Right? The entire dialogue right now in the United States seems to have gotten away from those facts. Let's put it a different way too, with regard to private equity. Now, people know that I advised investors before the Facebook IPO to be careful of that IPO because I thought the IPO was overpriced, right? But whatever the price point of Facebook, right? Whatever the profitability of Facebook, do you believe for a second that the fact that Facebook was privately owned until a few days ago necessarily meant that Facebook was evil? The fact that Facebook was privately owned, do you believe that that fact by itself, whether it's privately owned by Bob, Joe, Bain Capital, some other capital group, right? The fact that it's owned by individuals, private equity firms, or hedge funds, does that fact alone somehow make Facebook less well intended? Does that fact at all change Facebook's mission? In fact, before Facebook was a publicly traded company, didn't the executives, didn't the board of directors still have a fiduciary responsibility to try to deliver value to the shareholders, to the equity holders? And so the vilification of private equity and hedge funds really doesn't make any sense whatsoever, right? The fact that a company is publicly traded or privately traded by itself doesn't change the company's mission to make money and to serve consumers, right? And let's also not confuse ourselves. Making money is not a bad goal. Quite frankly, I don't see how that's inconsistent with serving consumers. I'd love to hear from you. Let me know what you think. Leave your comments for me here online. If you're financially oriented or you're looking for financial news, visit us at wealthspin.blogspot.com. And of course, if your angle is sports gambling, I hope you visit us at gamblersadvisory.com. Thanks for watching.